All right, guys, we had the CPI report come out today. It was a little bit more dovish than what the market was expecting. Last CPI report, it came in at 3%. They were expecting 3.3% today, came in at 3.2%. I believe the core CPI number was in line at 4.7%. So pretty much of a quiet report. I was kind of thinking that it might come in a little bit hotter. It didn't do that. It was just below the expectation. So you had this initial surge early on out of the market where everything was just rallying like crazy, and the big tech stocks were getting all bought up. I think I got within like 5 cents of getting into Meta at one point today, and thank the Lord that did not get filled, because that would have been a crappy sell-off thereafter. But that's why it's also important to have pretty good structured setups to where you want it to cross a certain threshold that increases the odds for success in a trade. So I didn't get long on any of the big tech stocks, but we're going to go over a lot of stuff today. We're going to go over Disney. We're going to go over Alibaba. We're going to go over Plug. We're going to go through the VIX again, because I think that's kind of an ongoing struggle that you're seeing right now with the market and with volatility. But probably the most interesting stock that I'm watching right now is Disney. I wouldn't say they had really good earnings at all yesterday. In fact, it looks like they lost subscribers, at least domestically, on their Disney Plus plan, and then they're hiking prices on the Disney Plus plan. I was looking at that. They're like raising it from $10.99 to $13.99. I think to myself, I have Disney Plus. I think I've watched Old Yeller a few times on it. I sometimes will watch some of the Marvel movies I don't see in the movie theaters. Outside of that, I don't have much of a use for it. I'm thinking to myself, I'm not paying extra $3 a year. That's like another $36 a year. I've got no use for it, so I'm going to cancel it. I don't want it, and I don't have a position in Disney. I don't care what it does, but I don't see the merit of what they're having to offer to suggest, hey, let's jack it up another 3% or 30% on people, or $3 when everybody's already struggling with inflation as it is, because they're not really trying to create the most happy place in the world. They're trying to create the most expensive place in the world. Trust me. I live in Central Florida. I've been to Disney more times than I care to admit. It's not worth the price that they charge for pretty much everything. So not a great quarter. The earnings came in at like $1.03. I think that was 6% less than what they were looking at from a year-over-year basis. That's what the revenues decreased by, or the earnings decreased by. Let's go ahead and look at the charts here on Disney, because I think that's going to tell a bigger story. On Disney, you have this consolidation essentially that's been going on since the late March. And I think today's price action was pretty interesting from a swing trading standpoint. You have essentially a breakout that took place today. So you have this sort of a triple bottom. You have the first bottom, the second bottom, and the third bottom that is formed. And then you had this big surge through it. It's up 4.8% today. And this is also a good example of why sometimes earnings do not make sense in terms of how the market reaction responds to the earnings itself. Not a great earnings report. Some people will say, oh, it's great that they're raising prices, but you don't want to lose subscribers in the process either. And it seems like that's one of the things that they're doing. And then you have this other resistance level too that it broke out of coming into today as well. You actually gapped above this resistance level. So two different layers, cleared both of them. If I'm looking to swing trade Disney at this point, I would look to be trying to play a pullback to this like 90.38, 90.40 level. See if it'll bounce. Wait for it to start bouncing. Don't just say because it's testing it that's a reason to get into it. And wait for it to pull back and then bounce. Now, if it can't hold that support level and it just crushes right through it, then you want to start looking at this particular support level. That will be about 89.35. You want to see if that support level is going to be able to hold for you. If it can't, then that's not a reason to buy it, really, right? I mean, it's simple as that. You want to wait for an actual bounce to materialize. You don't have to get in right at the very lows of a market bounce. In fact, I would say that's a really bad thing to try and do, because it usually leads to some pretty significant losses in the long term when you're always trying to bottom tick everything. So that's Disney from the very, very short term. Now I want to expand out a little bit more and show you another point of view to be very concerned with. This is a long-term declining channel. So this is one reason why I would say, no, I don't think I want to hold Disney. I had this one actually in my long-term account, and I don't make a lot of changes to Disney, or not to Disney, but to my long-term accounts. I don't make a lot of changes to my long-term accounts, but I did recently when I got out of Disney. I think it might have been like 3 or 4 months ago when it was trading still like in the lower 100s, like 102, 103. I think I got in at like 98 or so. I don't know the exact numbers, but in the end, I think I sold it for like a 2 or a 3% gain. It wasn't anything spectacular, but I also didn't think that the stock was really going anywhere, and I did not like the declining channel that had developed over essentially the last 15 months or so. But you got this massive declining channel. So if it does break out, yes, there could be a significant move from a swing trading standpoint that takes you up to 107. From a long-term standpoint, I don't think that's really anything to brag about, but that could happen from a short-term standpoint. But I would be very concerned of whether or not it's going to break back to the downside when it gets tested. We saw it the last 2 times, back in February of this year, and we saw it back in August of this year. So that's very possible. We saw the same thing with Tesla, and I keep bringing up the Tesla because it just continues to work like a charm. I mean, we've seen massive rejections at this major resistance level, right? And we saw it again here in July right before it reported earnings, it got rejected. So it's worth being concerned with these major long-term resistance levels, and you got a perfectly parallel declining channel that you want to be cognizant of. Now, let's zoom it out a little bit further because I think it gets even more interesting when you look at it, Disney, from a monthly chart. And I don't get into the monthly charts all that much, but what do you guys see here? You see a major support level. So essentially, this yellow line here, when you go back to the daily and look at it, the stock has been bouncing, going back to the late last year, has been bouncing off of this critical support level that really no one's talking about. And when you look at it from a monthly view, holy cow, that could be a real big problem if that level breaks. And so you don't want to see that, because then you're talking about a potential pullback of gargantuan proportions before it can find support. Because what we saw here in 2012 all the way through July of 2015, yeah, a long time ago, some of you guys weren't even trading back then, was a monster rally, but it didn't really form any long-term support levels in between. It formed support level, and if that cracks and you get a major market turndown, yes, DIS could go back down to 46. And I'm not just trying to spread fear or anything. It's good to be aware of some of these long-term support levels that could really come back to bite you. So with my analysis on Disney, what I want to highlight is the long-term problems that there is in the chart, not liking it from a long-term standpoint, but from a daily standpoint, I do think it looks a little bit more attractive when you're looking at it from a short-term swing trading approach. I don't think it's necessarily something I would day trade, but from a swing trading standpoint, it could work. Also, one more resistance level that I'd want to point out to you is this one right here. You got a little bit of resistance just overhead there. If it can break through that, it's likely to get into this gap here that was formed last time it reported earnings, when it had a beat down then. So then it sets up for a potential run to 101. So there's maybe about 10% of possible upside if this rally could continue from what we saw today. It's good, strong volume. And then their ideal price would be for it to get back up to this declining channel, the upper channel band of that, and then go ahead and take profits. Long term, help us if we end up breaking this level, because that's not going to be a good sight for the stock. So that's the analysis for DIS. Now, wanted to cover a couple more stocks. I want to look at Baba. Now, Alibaba reported good earnings. They talked a lot about AI. It was AI. It's a Chinese stock. That carries a lot of risk as well. I don't really trade the Chinese stocks right now. It's, for the most part, I've kind of shadow banned Chinese stocks for them on my watch list. Why is that? Too much headline risk. You're also seeing the president right now. He's banning some investments in Chinese companies. That could filter over into Alibaba at some point, and I don't know if I really want to be dealing with some major gap downs on the stock. We've seen it with Alibaba a lot. There's been some pretty weird stuff from people disappearing and everything else. Just not really liking it from a swing trading standpoint. Don't want to take a risk of it getting hit with a overnight gap event that causes havoc in my portfolio. So I think there's some developments on the chart that's worth pointing out, and we can go ahead and look at those right now. So on Baba, we have the monthly chart here. Not anything worth getting too excited about. Maybe some resistance right here that if it can make a move up to this 122 level, you could finally see that surge that takes it back up into the upper 100s. But what we really want to be concerned about is these short-term levels. And right now, it got right up to this price level right here at around 102. It needs to get about 102.64 in order to get to that breakout level. Wasn't able to do that today. It got to a high of 101.84. That did not confirm to the upside. To the downside, you want to be aware of this purple line right here. This is going to connect some major support levels that it's bounced off of. So if you do get a downturn in the stock and the days are mindful of the 72, 74 level, I think that's a long ways from here. That would be a 25% decline essentially. So I don't think that's something to really worry about all that much. You also have a rising trend line here to keep an eye on as well. We'll give that a different color here, maybe give it like white. And we could see a pullback to that level as well. But the big part here, and I'm a little bit concerned of how do you manage the risk on a swing trade with this particular setup. I do like the idea that if it breaks to the upside at 102.64, that it could make another big run up to the 120s. It's got some resistance, like we said earlier, but a move to the 120s would be fantastic from a swing trading return. But how do you manage the risk? Where does the stop loss come in? So with it trading at about 99, about 3% away from where it would need to be to confirm a little more than 3%. What I would like to be able to see is some consolidation in the meantime. Like let's get some consolidation. Let's get to where maybe we don't break the lows that were established today on this candlestick. And that would be, let's not break below 97.12. Let's consolidate inside of this candle and then make that next leg higher. And I think that could be really good. And I'm seeing y'all's stocks too and questions. So we're going to cover all those here in just a minute. I'm just going to go over these couple of charts and then we'll get right to them. Then with BABA, it's a waiting game. I really don't want to get into it right now while it still has this heavy resistance overhead, because that negates the profit potential. We want to see that it can clear that resistance and move on to the next resistance level. And you have another gap right here that can be filled in the process. So that would be a nice little cherry on top for the trade. Last setup that I want to look at is Plug. Plug. Plug does not look good at all right now and did not have a good earnings reaction, down big time. And this is really just a good example of why you don't hold earnings, why you have to be cognizant of, hey, when stocks start to break below major key support levels, you've got to be aware of that. This was a huge support level for Plug right here at 1180. Once that broke, you have to get out of it. It's just, you can't hold on to these things hoping for the best. And so you have plenty of time to get out of it. And the writing was on the wall. Struggle with the 200-day moving average, sustaining a move above it. So that was every reason right there to go ahead and get out of it. Now, what I want to do is I want to go ahead and look at your charts, and then we'll wrap up with the VIX. Let's see. First question we have got. Hey, Ryan, where do you see support for NVIDIA? It had a nasty drop this week. Thanks. All right, let's go ahead and look at NVIDIA here. So with SMH, and I think there was another question, Jason C was asking about SMH. So what we're going to do here, we're going to cover SMH and NVIDIA because I think they go hand in hand here and we're definitely worth combining together. So SMH, I think it's a little bit clearer of a chart in terms of understanding the direction that it's taken. You had this double top here formed really nice. You can go ahead and just get rid of that line here. I don't think that's important for the meantime, and it's a little distracting. But you had this rising trend line here going back to late May. That one had held for the most part until Tuesday. It traded back below it, closed below it, and then we got 2 days of follow through yesterday and today. You also have this purple line here that confirmed the double top. So this is the double top that I'm talking about. First top, we got the second top, and it's breaking. So not a good situation for SMH at all. Where does the next layers of support? So you want to start watching previous lows. So one area would be right there. That would probably be around 147-ish. And then if it can't hold that level, maybe it can hold this level. And these aren't like what I would call necessarily really good or encouraging support levels. They're just levels that you're hoping for some support to gain hold of. And then you got this massive gap. And this is probably from the NVIDIA earnings when I remember that one. That would be a massive gap to the downside or gap fill to the downside if that was to actually happen. That would be at 130. That means, a $20 drop in SMH, not going to look very good for a lot of your semiconductor plays, considering how many of them that SMH represents. For all this to go away, what you would essentially need to see is, one, recapture this purple line. That would be resistance turned support. Then it really can't get bogged down. I don't think this is going to be support going forward, but it could be resistance though going forward. So I think it needs to get back above this resistance level of this old broken trend line. That's going to be the next challenge. It does that, then you're back into this channel, sideways channel right here, where there's really been no resolution over the past month when it was in it until just the last 3 days. In order to nullify all that stuff, it's going to have to break above that resistance level. So in order for that to happen, that's going to be a pretty sizable run. You're talking about a move from 149 to 162. It has earnings coming up. Earnings could be another humdinger like what we saw back in May, where, and I'm not trying to confuse everybody with the NVIDIA, but NVIDIA is a big part of SMH. So that's the next big earnings. So you could see a move in SMH that takes them, because of the results of the NVIDIA earnings, that takes it back up to 160. But SMH is essentially going to have to break back above this double top pattern in order to nullify some of the bearishness that we've seen of late. Because even if it gets back to just the top here, then we're talking about a potential triple top there. I mean, it's really just, it's just going to be rough sledding for SMH. Now, looking at NVIDIA, and big shout out right back to you there, Kevin, being from Lakeland, Florida. Trying to get my, sometimes this happens on my charts. I do have an internet connection and I'm not pulling up anything. So there we go. Holy cow. Talk about sweating bullets while you're doing one of these things and all of a sudden the charts don't want to pop up. I do have backup with TradingView and everything, but NVIDIA, holy cow. NVIDIA has this massive gap. We talked about the gap in SMH that hasn't been filled, and that's also like in conjunction with the gap. NVIDIA has a long ways to go here, man. We're talking about 422 all the way down to 370. Be like a 15-16% drop off the top of my head. That's don't fact check me on that, but that's kind of roughly what I'm thinking it is. So this rising trend line, this blue line here, that was the NVIDIA trend line that had been hugging on to up until 8.2. So at the beginning of the month broke below it, then it tried to hug it and then just completely fell apart the last 3 days. That's a significant move to the downside. It's almost like these 3 days here were almost like a bear flag pattern. I'm starting to messy up the chart here doing this, but this would be like a little bit of a bear flag. Let's get the parallel line. There we go. Right there. And it confirmed to the downside. So that's getting ugly. I don't see a lot of support for this stock nearby. You have a little bit right here at about 402. That's still a pretty significant drop. That's about another 5% for that thing. So you have a little bit of support right there. Again, it's messy. This makes it a little bit messier right in this area here as well. And then you got another layer of support right over here. That needs to, that can potentially hold it as well. Beyond that, then gap fill, you're getting into this rising trend line that could be right up at the beginning of the gap fill as well. But that rising trend line is going to also be very important. When you zoom out on this thing, it's one of the scariest stocks out there. I'll be honest with you. I don't like what I see out of NVIDIA. When you see this kind of parabolic move, this irrational kind of move, it gets very scary. And you got this massive gap down below that could be filled. And we thought this was a big move. And what happened? We saw price return right back to that trend line and then bounce. I don't necessarily see that happening anytime soon. I think you would need to see another 2022 like move out of the markets in order to see NVIDIA return to this rising trend line. Not impossible, but I don't think it's for the here or now or anything to worry about at this moment. But I do think this white rising trend line could be the next thing in play there. Let's see, coin, covering coin here. Let's look at that one. I haven't updated this chart in a couple of days here, but it really still holds. You got coin inside this never-ending bull flag pattern. You think that, man, when is it going to break out of that? It's very orderly. The volume is very, very light. I mean, that is extremely light volume. We haven't seen the stock be able to break out of that declining channel yet. So, and there's a lot of days where it's actually testing the upper band and lower band are getting very close to it. So to get bullish on, and here's another good example. A good example of why you don't want to front run a bull flag breakout or really any pattern for that point. Let's say right here, you thought to yourself, oh man, this is going to break out of this bull flag pattern. We're gapping up today on 727. You're going to get in at 101.47. And then it just completely falls apart down to 92. And all of a sudden you're just bag holding. So you want to wait for these breakouts. Doesn't guarantee that it won't turn into a loss as well, but it increases the odds in your favor that it's going to work out in your favor when there's a technical breakthrough. So right now you haven't got that technical breakthrough, and we're looking at it needs to break back above 90.80. I'd say 90.86 would probably be the right way to go. Right now it's in this decline channel and it remains in it. Support levels underneath. You see there, it's testing that pretty big support level there. 100% it's testing that thing. Yeah, that's a big support level, so it's going to need to hold that. You could see it in the coming days try to bounce off of that support level at 83.30 and push back above it. I'd say 83.30. It's like kind of it's not a perfect range by any means. I would say it's somewhere around. Yeah, I mean, you got price essentially just a shade below it. I don't think that's a deal breaker. I don't think that's necessarily a breakdown of support. It could easily recapture, and it could just be that my drawing is not as tight as it needs to be. So coin, I'd be watching for that. Boeing. We'll go to Boeing here. False breakout, man. Boeing is like the king of false breakouts at times. Like this reason why I say that is, I mean, look at these little resistance levels here, false breakouts. Then you got Boeing right here. Breaking out. That one looked really good. I almost pulled the trigger, even though that I hate trading Boeing just because. Talk about headline risk, man. I think it was full of it back in the day. So you got the big gap that was earnings there, and then you got these nasty looking like upper shadows. It's like every time it tries to break out, it cannot do it. Last 3 days have all been head fakes, right? Maybe form an ascending triangle pattern there as well. I don't know. Sometimes when I see a lot of these false breakouts, I try to redraw the pattern just to take into account those things. But it's like every day the false breakout becomes worse and worse. I mean, this false breakout's worse than this one, and this one was worse than that the previous two. So seeing that kind of stuff troubles me a little bit, because even if you play the breakout tomorrow and wait for it to clear yesterday's highs, it would also clear the previous 2 days prior to those highs as well. But are you really looking at a breakout you can trust? I don't see it right now. I mean, this rising trend line here off of the lows, I mean, that's not even the best. There's not enough price points there to really use it, but maybe a stop loss below 235.60. Okay, let's talk about the wait, I didn't want to pass over PayPal guy, box 2. Let's talk about PayPal. All right, PayPal. What do we have here? So this trade here, I actually got into this one, and I'm trying to remember offhand, where did I get in at? It was using this rising trend line here. So essentially, you had this cup and handle pattern right here. Broke out, retested this rising trend line. And I think it was somewhere, I want to say maybe like around the 66 level or so. I took profits along the way. I think I took them in thirds, 1/3 for like, actually the first one, I do remember this trade a little bit better now. I took 2.5% loss on the first third. I think it was this candle right here. I was like, oh, that's not good. So I took a third. I didn't get out of the whole position. My stop loss wasn't triggered. I think my stop loss is just below this level right here, 65.51 or so. And then it bounced from there, and it did really good. I think the last lot I made like 7% or so on that trade. I think I went away with like 4% total on the overall trade. So it turned out pretty good, but there was no way I was going to hold this sucker through earnings, so that's for sure. Earnings was not kind to it. So this here, PayPal has just really been a disaster. It really has been. I mean, I know a lot of us are really hoping for the best, that, man, maybe there's going to be a long-term opportunity. You do have this gap that needs to be filled at some point, but you could probably search around on this chart. There's gaps everywhere on it. It just it's not a healthy stock at all. Let's just clear it. Here, we clear it right there. What are we looking at here post earnings? Let's just start fresh. You got some resistance right there. That stands out first. That's around 76, trading at 62. So it's not in the here now, but we're supporting here. Buy it. Let's find that. I mean, even when I zoom out, it's like it doesn't look good. Like this whole thing here looks almost like an anomaly that took place over like the course of a couple of years, but it's almost like it's just still in this like mean reversion. Like it needs to I mean, I hate to say it, but almost you got to go back to 2016, 2017 to find much support if it breaks those lows from a few months ago. So going back to the daily, there's really not a lot to work with here. You have this broken trend line. That one, failed in spectacular fashion, and then it's just breaking down. What you want to see is does these recent lows from May, do they hold at 59? If not, I mean, there's not much going for it. It really is bad. And I traded it. I kid you not, I was in it last month. So let me tell you, I was sometimes sweating bullets on that one too. I just never know when stocks are just trading that bad if there's going to be something ugly that comes out on it. Qs from New Way. Great work. What a day for the Qs. I would love to know your opinion. All right, let's talk about the Qs here. So on the Qs, let's go back to, let's clean this one up a little bit here. I think there's only a couple of things that I want to highlight for you on the Qs. First of all, you got this rising trend line right there, okay? That's pretty much what I drew for. Yeah. Actually, I need to tighten it up a little bit. Rising trend line right about there. So you had the break yesterday, and then you had the holding of that break today. Now, it looked like we were just going to gap and run and go right back to 384. Like I said, I was ready to go buy the bull flag and Meta this morning. Had the order in for it and everything. Didn't trigger. I think it got, like I said, within 5 cents of triggering. So thank goodness it didn't do that. So then when we started seeing the Qs break to the downside, that starts to give you a good thought that, okay, people are selling this. You got I think it's the PPI report tomorrow. Not really something that traders seem to be interested in playing. Now, you also have some key support right there. You had a little cup and handle pattern back in June. You might remember me talking about that. Broke out for about 5 days. Then it just went into this sideways consolidation pattern, much like what we saw with SMH and NVIDIA. And then it's now breaking down. Same thing like kind of what we're seeing with SMH. Same thing with like what we're seeing in NVIDIA. In that breakdown take place. So with the Qs, yeah, I'm growing much more bearish on the Qs here as with each passing day. SPYs look like it's trying to roll over some too. Doesn't mean that there won't be some crazy news event that happens that everybody forgets that this ever happened. It sucks the bears in and only to rip it higher. But right now, if you're looking at what's in front of you, Qs are breaking down. Not necessarily something I want to be buying the dip on. I hate even saying that because I hate getting short on this market. I really do. I've done it multiple times throughout the course of this year. Not a lot of success doing it. So I start to see the Qs set up and I'm like, oh, crap. I'm going to have to get short on this thing. I don't even want to do it, but I do. So is Tesla daily forming a inverse head and shoulders pattern? Or am I wrong? Well, let's look at that one, Sonny. Did I say it right, Sandy or Sonny? I'm not sure. Correct me in the comments if I'm wrong, though. All right, let's go. Inverse head and shoulders pattern. Yeah, he said inverse? Yeah, he said inverse. I could see, no. Well, trying to see if it's maybe further out. I just don't see it at all. Okay, I think I might see what he's talking about here. He is on to something. And that's a good point. I actually have not caught this until he just mentioned this. So good find there. This is what he's talking about. Surprised this hasn't stuck out to me yet. So what he's talking about, actually, let me find a board that is not all. There we go. That's not all marked up. That's essentially what I was trying to do. So here's your inverse head and shoulders pattern. Left shoulder, head, and then possible right shoulder form. Problem is that we don't know if that right shoulder is actually going to form. If it does, what I would like to be able to see it go down to like 227, maybe make it a little bit bigger. Because if it comes like just right down here and then goes straight up, not sure if I want to write home to mom telling her that's an inverse head and shoulders pattern or not. But if it can, carve out a much deeper route here to the downside and then come back up, I do think that you have an inverse head and shoulders pattern. But going back to the original chart here, it's going to need to break through some hit because this thing just keeps kicking Tesla's butt here. It goes right up to it at 290 and pushes right back on it. So you'll want to keep that in mind. I just covered it. Yep. So good. So your comment came right in time there. PayPal is terrible. You can also check RKT. This one is coming back from the dead. Let's see it, man. I haven't had anybody ask about RKT in a while. Goodness, I haven't marked it up in a while. You can see, man, it's been a while since RKT's even shown up in a scan. Doesn't mean it hasn't done bad. Usually I don't really scan for stocks under 10, and it's just recently gotten back above 10 over the past month. So not a bad look at all there. That's a nice basing pattern pushing to the upside. It's almost, what is that about? That's a big move going off of it. Almost a 100% move just going back to late May. I would be careful with it at this point. I don't want to chase it at this level. I'm just trying to see. I mean, you can see the trends are getting a little bit steeper on it. Where I would play this at, and it takes a little patience to do it, but so many of your breakouts do end up coming back and testing the breakout level. I'd wait for it to come back down to 1050. If it can start to bounce, then I would play it. I would say, okay, I'll play that bounce off of it. I'll even add it to my long watch list here just because I think it's a chart worth watching in the days and weeks ahead. But I don't think it's going to be a trade to play right now. But if it can pull back in, let's say, the next couple of weeks, yeah, I think there could be some potential there for sure. So big thing is not chasing stocks, man. We get ourselves into trouble when we start chasing. Let's see here. I think we got it all covered here. Appreciate you guys coming, throwing out some good questions there, and supporting this channel. Make sure to like and subscribe. Make sure that you're part of this channel, man. We're doing a lot of content these days. We're doing about 2 live streams. Got somebody helping me with the videos, which is godsend, honestly. So that's really helpful as well. So make sure to do that. Like, subscribe, check out swingtradingthestockmarket.com. If you're a fan of the podcast, you can get a lot more research each and every day from there. Thank you guys, and God bless.